Good afternoon, everybody. It's Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments. It's 3 p.m. We've been closed for an hour and a half. Got to get right to it. Dees corn up 16 1/4 cent at 4.57 3/4. Novi beans up 44 1/2 cents, 11.92 1/4. September wheat up 14 1/4 cent at 6.14. The feeders lowered on the day slightly, but we did have an 8-cent range. And the interesting thing was feeders. I'll get to this in a minute, but we did have a big technical level here at 356.60. That was halfway back of the $40 rally that we had since the June 4th New World Screw low that came out, that was announced that it was in Texas. Well, we rallied $40 right after that came out. Today's low was halfway back. So is the rally over for cattle? I don't know. Is there downside risk? Yeah, there is, especially if the funds decide to liquidate their long bet. So nobody sells the top. But what we want to try and do is protect as much of the meat of the move as we can. Back to the grains. All right, so here's what's interesting. July corn, spot corn, we hit 487.5 twice back in March and then in May. Now, of course, hindsight's 2020. Now you can say, well, gee, all you had to do was sell it there. I get it. That's bananas. We did know that it was a 1-year high, so we tried to reward that 1-year high. The sell-off that we had took 38 days, and we dropped down to 398.5. Right, so I'm just going to call that for argument's sake, from 87.5 on the top to 98.5 on the bottom. I'm just going to call it 90 cents. We broke 90 cents. Today's recovery, almost halfway back. So it took 38 days to lose 38 cents and 3 days to claw back half of it. This is exactly why we try to manage our hedges. We try to roll down our puts for markets like this. We try to look for opportunities to re-own any cash sales that we made there higher. Now, a week from now, we could be at $4.90 or we could be back under $4. I get it. I'm not sitting there telling you. I can tell you where we're going to be. But it sure feels like it. And it sure looks like the managed funds are short and wrong. They were short and wrong back in January. I don't know if you remember this or not, but they were short quite a huge chunk of wheat. And then wheat turned around and rallied $1.50. They were short corn and beans as well. Then at the top in May, they were long 300,000 contracts of corn. They ended up selling all those and then another 70,000, and that's where they are right now. They're short 70,000. So they lost on the way up. They lost on the way down. And now let's hope that they're going to lose on the way up because they're short and they're wrong. And they just got their first punch in the face today. Hopefully we can get some more out of it. And it'll do what? It'll let farmers and producers sell prices higher if we get there. Can we make it to 460 or 470 again in July corn? I don't know. Can Dees corn get back to 475 or $5? I sure hope so. Right? So we're going to try and make the best of this rally as we can. But all things considered, pretty doggone good. If you look at Novi beans, just impressive. Almost got a $12 print. The contract high is $12.14. That's what we hit right before we broke. The all-time contract high is $12.40. So are we going to go get that high on the which goes back about a year and a half, 2 years? I hope so. But there's that annoying phrase people always come up with, right? Hope is not a marketing plan, right? We traded, believe it or not, in December of 2022, right? 3.5 years ago, we traded this contract at $12.41. The high before the last break was $12.14. We finished today at $11.92. So is it possible? Yeah, it's possible. Hard to believe that, again, just last week, we were down at $11.25. So a good rally. Try to take advantage of it as best you can. We'll get after it again tomorrow and see what happens tonight. Hopefully we don't get a turnaround Tuesday where we move sharply lower, although that's always possible. The driver, some rumors again that China is actually coming into the market. Surprise, surprise. Also some concern that it's going to get hot and dry. Well, it usually does during summer. So are we going to get enough damage to hurt yield for corn? I guess if you're a bull, that's what you want to hope for. We don't have a drought like they do in Europe, although that European drought is starting to get people's attention. They're starting to think twice about what the worldwide carryout might be. At the end of the day, we're trying to take advantage of it while it's here. And so all things considered, it was a great way to come back after a long holiday weekend. Hope you had a good 4th of July. This is Chris. We'll be back at it again tomorrow. And if you're not getting my letter, RobinsonAgMarketing.com. I cover all this stuff in a weekly letter. I do a daily letter. Tonight, I'm actually going to send out the 15 or 20 minute, I'll try and keep it to 15 minutes. Just a little webinar where I'm going to dig into these charts, right? So you can watch it on your phone. I go through and teach it like a Zoom class. You don't see me talking, thankfully, but I do go through the charts and point out key areas, because my goal in doing that is to try and educate people as to what it is I'm looking at, try to share with them the things I've learned in 30 years of doing this. Okay, guys, have a great day. Take care.